Hey traders, this is Ron Haight. Hope you guys had a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Dow ETF, the DIA, the Diamonds, up $3.77, 1.45%, and completed bullish engulfing over the previous day's candle. This is bullish, hence its name, bullish engulfing. We opened below it, we closed above it. However, this is still a bear flag. We must get above the 20-day EMA in red and the 50-day SMA in orange. We get above both of those, then the all-time highs become the target. Now, today's rally was on the heels of the president rolling back some of the tariffs on some stuff, but not on all the stuff, so the market started going nuts. Whether or not that carries through to the next day and the next day, we're not going to get caught up in this. Today was a nice up day. Today was a pickup in volume, but work still has to be done. Here's the Spiders S&P ETF. We did, if I zoom in even closer, we did trade above the 20-day EMA in red and the 50-day SMA in orange, the institutional moving average. However, look where we closed. We closed back below it. Bulls do not get the edge even after almost hitting 100 million shares today, which is well above average. Not there. It's just one up day. Yes, it's bullish engulfing. We opened below the previous day, closed above it. I get it, but we still got to close above both these moving averages, and then the target is the all-time highs. You take a look at the Qs, up 2%, $4. Let's see, how did they do? Well, what do you know? Let's zoom in even closer. Nice pickup in volume. We did close above the orange, which is the 50-day SMA. The 20-day EMA finished at 188.42. 188.42. We closed 188.39. We're talking 3 pennies here, right? It's 4 pennies, 5 pennies. It's a couple pennies. It's not much at all. So what does that mean? Well, we're still below it. The bulls don't get the edge just yet. It needs to close 4 cents higher than it did today, and that would start giving the bulls an edge on the daily chart. So Qs are looking a little better here. As a result, Apple had a good day. I was reading an article again. I'm just going to save the author and the location of it, but they talk about the tariffs rising, and Apple's not going to be exempt from this, and there's going to be this 10% tariff hike. What they keep forgetting to mention is 10% of what figure? That's the valuable piece of the information. Is it 10% on the cost? Is it going to be a 10% on top of the retail price? What I'm saying is, what is the end result to the consumer? That's what drives the economy. That's what really matters. So if we're talking about a few pennies, a few dollars, the price of AirPods or something going up by a couple bucks is not going to hurt anyone. If the price is going to jump $20, $30, maybe that's a different story. But again, it's always, every single time, it's omitted from the article. So it's great to sell fear, but they don't actually sell any meat in the articles. It's just a shame. Nonetheless, Apple up 4% today. It did get back above all moving averages. It was already above the 50. It got above the 20. Filled this little gap here. Target back up towards 215. Now, allegedly, the news came out later in the day, so we can see that the AirPods and so forth are not going to be included. We have to wait until that comes out tomorrow, or maybe the news gets digested tonight and we see how it trades tomorrow. Regardless, Apple is still bullish now on the daily chart. Taking a look at the semis, they were up 2.87%. They could not get above their 20-day. They regained the 50, not the 20. We get above the 20, we go back up here. So caution is still warranted across the board. Apple looks the best right now. How about the banks? This is just one pretty bear flag. Here's your flagpole, and there's the flag. Pretty symmetrical, actually. We have bullish engulfing. We have a pickup in volume today, but it did not break out of the flag. It did not break above either moving averages. So despite today's rally, it's a one-day thing so far. Banks still bearish on the daily chart. Here are the transports. Again, another picture-perfect bear flag to a degree. Flagpole. Chop, 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 chop. Flag. Below 180 bearish, targets down here at 175. For it to be bullish, needs to get above the 20-day and the 50-day in orange. So again, across the board, caution is still warranted. Bears have the edge on the daily chart on the majors. Now, I had a couple questions tonight. Dollar, gold, and three other stocks. Plus, we'll add a bearish stock to the watch list. Here's the UUP, which is the US dollar ETF. It was up almost 0.5% today. Volume sort of light. It's still setting pretty much higher highs, higher lows. We did have a break in it during the month of June. And if I just visually try to show you this, that's not really good. But let me see if I can click it. Nah, let's delete it. I'll just draw it myself. You sort of get the idea, right? There's a trend line. Here's a trend line. We had this breaking of the 50-day in orange, started going lower. We took out some previous lows here and here, but that all changed in July. July, we break out of the channel. We come back test, and now we're pushing higher. So the bulls are back in control of the dollar here. And if the dollar is going up, the euro, it's probably going down. So the euro did have a bounce from around 105 up to 107, and now it's rolling over. At this point on the euro, pretty much below 106 puts you down to a gap fill at 105.75. That's not a big move. It looks like there might be a pretty big gap on the chart, but it's 25 cents. All right, how about gold and silver? Gold was a little all over the place. Opened, traded lower, it gapped up, traded lower, then it fell out of bed, then it rallied back. If I show you let's do a 2-day, and let's do a 5-minute chart. Here we go. You can see GLD sold off, and then it started coming back. Well, this was all on the heels of the market going a little bonkers. So it did finish off the lows. Gold is still bullish on the daily chart. Silver, also really wide range, finished down 0.69%, but went all the way down and practically filled the gap before closing back up into that sideways action from last week. And then if you have the miners, George Delta X-Ray, they actually got below the 20-day EMA, but closed back above it. Remember, if I'm trading the miners, I want to keep an eye on that 20-day EMA. We get below it, that's a big warning sign. Big yellow flag for the miner bulls. And other questions, Tesla. Again, this is always for educational purposes only. This is not advice to buy or sell. I'm just giving you my opinion of a technical chart on a stock. So Tesla here was one question. It seems to be holding the 50-day here since the end of July. So, 4 weeks in or so, we're holding. If it gets above the red line, we could start looking towards a potential gap fill. You'd also want to take out whatever the highest close here is, 242. Yeah, so 242.26. Let's say 242.50. We get above there, then the gap fill could be the target. Otherwise, we close below the 50-day. That's not going to be a good sign. And the next major support is back down there in June around 170. Also, request on Zillow. This thing fell out of bed. Broke below the previous low. Target is down here at 32.50. You do have 4 straight days of outside the lower Bollinger Band. That is very, very oversold. It doesn't mean it's going to get to 32.50 ever, or in a day or two. It could take months. How this usually plays out from a probability perspective, 90% of the price data plus is going to fall inside the two standard deviation John Bollinger Bands, which are the green lines. If it gets back in there, that relieves the oversold condition, and then it can fall again. So from probability, it's probably not going to go straight down. Might go sideways for a day or two and then back down, but that is the target right now. Bearish on Zillow. And NVRO, stock that I don't look at, this is NVRO. 1-year chart up 2.37% today. 3 straight days of big, big, big movement. I don't know why. I'm not going to look at the fundamentals at all, but something must be news driven here. Target up here towards 85, $4 away, and the gap fill up towards mid 90s. And last but not least, we'll leave it with CIT Group, not Citigroup, the bank, but CIT Group. Broke below support of 47.50, broke below support around 46. Next support, December lows, $36 a share, still $6, $7 lower right now. And volume picked up today as well. So we were outside the Bollinger Band three days in a row. We had a bounce. We rolled right back over. So this is not looking good for CIT. That's it. Have yourself a wonderful day. I'll be back with you tomorrow. Take good care.